Kev, it's time for the top 5 things to watch next week. And let's start off by just reviewing last week and just seeing what happened here. Now, so number 5, retail sales. They came in, I guess you could, to me, they came in line. Some people were calling them a little bit hotter, but they didn't disappoint. They didn't.
It was kind of it wasn't a big event. It's as
No.
usual. We're picking something that's a big deal, and it's not.
But we were looking for a miss, right? Just in case, like, if there was a big miss, then that would kind of potentially be ammunition or fuel for the Fed to move, right?
Well, I think you're saying we were looking. I don't think that was the case.
No, that wasn't
You
the
were
case.
looking, probably.
I was looking. Okay, fine, I was looking. But retail sales came in line. It wasn't a big factor.
Okay.
Very quickly, Visa, MasterCard, they didn't give anything back just yet. I mean, they continue to be.
I think they're trading great.
Yeah.
They're hanging in there. They're honey badgering it themselves. Like they just keep going higher.
They just keep going higher. Nothing seems to be phasing them, at least not yet. But number 3, this inflation boogeyman, Kev, is nowhere to be found. He keeps falling into the basement.
I saw you giving me some stabs on Twitter there about the inflation. And you're right. It hasn't come yet. But don't forget what our buddy Stevie Vick said. There's a lot of stuff in the second half, so I'm hanging tough, buddy. No, you haven't convinced me yet.
All right, I can't wait to take you down in the in Chicago, man. This is gonna be good. All right, so number 2, gold. It's a great time to be recording because we literally had an attempt for gold to break out to 52-week new highs today.
Right.
And literally in the few hours right now before we started recording, it pulled a little bit of a prairie dog, didn't it?
I think it's not just a little bit of a prairie dog. That's a huge prairie dog. That's like a big, huge alpha male prairie dog if I've ever seen one. Don't you think?
An alpha male prairie dog, right? That's a new term for our listeners. That it's not just a prairie dog. This is an alpha male prairie dog. But, where I'm a little bit worried about this pop and failure is that Paul Tudor Jones, when he makes that much headline about being super bullish gold, it causes the typical market event where there's a wave of people that just chase his idea.
Yeah.
And while Paul will probably be right over 12 to 24 months, you have to think that this little surge could have been brought about by people that are just getting a little bit ahead of themselves. And that break to higher high was just a move to draw everyone in. And I think the one big tell as to why gold is doing that is it has to, I think, have a little to do with the fact that the dollar was up so much today. The dollar index had a pretty big move. And it's going to be hard for gold to just run away when the dollar is strengthening like this.
Another thing, I see that Gunlock also goochered it by jumping on the gold buying bandwagon.
Oh, not Gunlock.
Yeah.
He goochered it?
Yeah, well, I think if we got Gartman, it would be the trifecta.
Oh, that would be the trifecta. That would you're done at that moment.
You're done. Short all the gold you can.
So
you know what? The last kiss of death is if we were both long.
Shit, we both are.
No, you know what?
Oh, you're long silver. Give me a break.
I'm long silver, which has got a little more juice, and I thought I was working, but then today I got hammered. Today, like as bad as gold is, silver's worse, so I'm having a tough day. But anyways, let's go on.
So renminbi, and this what I found really interesting about the Chinese yuan is the fact that China came out warning before the G20. Saying to the renminbi bears, saying, "Be careful."
Be careful.
Be careful. But
oh my God! Here you are with your terrible chart again. Flip it, buddy. You're always doing the. Yeah, you do, because that's the wrong. Nobody looks at renminbi as like 0.1443. There we go.
Sorry, there you go. You got your U.S. dollar. How it's trading against renminbi. Are you happy?
That's
You're
the
happy.
Thing. Yeah,
right.
I'm happy. That's we're gonna fight about that one till the day we split up and stop. We get a divorce.
Anyway, so the U.S. dollar's rallying. So congratulations, you got another U.S. dollar chart up for you. Okay, so So anyway, but you can see that's edging up there. So what I'm going to be really fascinated to see is whether or not this makes you know what? Let's be realistic. Odds are it should stay pinned into the G20. Like the odds that China, like it is a managed currency, and the PBOC is pegging it, and they're controlling the flow, and there is no political advantage for them letting the currency go before the G20.
So I actually disagree with you. If I was
Really?
them, yeah, I would let it go, and I would get everyone hot and bothered and buying the breakout in this, meaning selling renminbi, and then I would hammer them.
So wait, selling renminbi. Maybe we should flip the chart so people understand what you freaking mean. Oh, here we go. Selling the renminbi. Now we're talking.
Okay, whatever. So the reality is that I think they let the support go, and then what happens is they get draw in all those kind of technical people and everyone that gets all hot and bothered, and then they just slam them. And they slam them, and then everybody's offside, and there's a lot of late positions, and I could very well see that. I'm not writing that off. Everyone thinks that
what?
7's going to hold. I could very well see it going through 7, sucking everybody in, and then doing it.
That's possible. You know what? Personally, I don't trade this currency pair.
Yeah, I don't either, because it's a you might as well. It's a political game. It's not really. It's not trading on fundamentals.
It's better to trade the repercussions of if that broke. What would it mean? And you could play the Aussie. You could play the yen. There's all sorts of different cross relationships that you'll be able to play the periphery and have a cleaner trade setup than trying to trade this one.
The one thing I will say that I like trading is gold priced in renminbi. And I remember when that broke 8,200 and everyone was getting all bearish, and I said, nope, that's going to hold. And it's popped from there. It's rallied from 8,200 to 9,200. This thing just continues to run. I think it's going to be one of the better trades for the next little while. I continue to love gold priced in yuan.
All right, so let's definitely something to continue to watch. But you know what? I'm still curious. Wouldn't it be interesting if gold never gave back? Well, forget it. Let's move on. This is it was a prairie dog. We'll leave it at that. All right, let's get to the top 5 things to watch next week, right? And so next week. What is the number 5? Well, I wanted to just give lip service to the European and U.S. PMIs, both manufacturing and service PMIs coming out. And, this is obviously this is where a lot of the leading indicators for potential recession all kind of rear their heads, right? Like the PMIs have generally been gravitating toward 50, and in the case of Europe, they've already been below 50 for some time, particularly in a few of the places like Germany, right? Here, let me just give an example. So this is the chart of there we go. This is the chart of German PMIs, right? And so we've now gone on to 4 or 5 months of negative manufacturing PMI in Germany, right? And
I think what they need is lower rates and more fiscal austerity.
Because
I think that's
minus 20
work.
basis points is not enough. In order to ramp up manufacturing, you got to go minus 50 basis points.
Yeah,
who are you kidding, right?
That's just insane. Like it's the idea that they're going to continue doing that. That is like not just batshit crazy. That's like flying fox, the golden crown flying fox of the world's largest bat in the world. That kind of flying fox batshit crazy. That's how dumb their policies are, and they continue to do it. And the idiocy, like I can't even say it, the idiocy of them trying to do this is just dumb. How they think they're going to just do more and it's going to fix their problem. It's crazy.
What's the problem with their negative interest rates is that the U.S. is not negative enough. So we need Powell to get onto bandwagon.
No,
because it's not enough that
what they need to do is an actual proper fiscal stimulus. And it's very clear, and the whole world knows it. And for some reason, they seem to think that more of the same is going to solve their problem, and it's not. So, anyways,
and so anyway, this is the U.S. Later that day. So it's a Friday overnight is going to be where the European numbers come out, and then you have Friday at 9:45 a.m. You're going to have the flash manufacturing PMI in the U.S. And what's interesting is, okay, so we were up around the 56, 57 on the PMIs back in 2018, but they literally have been falling off a cliff in 2019, and this is what's got Trump's panties all wound up about cutting interest rates, because he sees that these are kind of leading indicators that are potentially suggesting increased probability of recession. And he's blaming Powell that the reason that this is happening is because interest rates are too high, right? And so it'll be very interesting in my mind to see whether this trend continues, right?
Well, I'm not going to say it's going to end this week, but I think one of these times, the economic bears out there have priced in almost like a recession, and one of these times we're going to get a situation where it does, if it does manage to stabilize and head higher, there's going to be a wicked sell-off in the bond market. That's what I think.
Oh, Jesus!
It's all about expectations, and I think that it's very difficult to continue to get bad enough economic numbers to satisfy you economic bears. But we'll see. You know what? That's what makes a market. We're on the other side. Patrick, I'll see you in the machine. I'll see you in the machine, buddy.
Oh God! Oh my God! Listen. All right. Forget it. We'll meet you in the machine. All right, we'll leave it at that. So number 4. I want to get to talking about lumber and home builders. So I was listening to Josh Steiner. He was on Macro Voices, and
he's from Hedgeye.
A Hedgeye guy,
yep.
And he was obviously bearish Canadian real estate, but he was bullish U.S. Real estate, and
he's a smart guy, that Josh Steiner.
Yeah, and he was obviously supporting your idea of home builders going higher. And so I really wanted to talk about lumber and lumber prices, and as well as how these home builders are behaving, right? And so what was particularly interesting to me was that lumber in the last week has really started to rip. I mean, like on the chart, it doesn't look like it's huge, but I mean, for 1 week, that was pretty much like a 25% rise in lumber prices in 1 week.
Yeah. Unbelievable. That's crazy, man.
On a percentage basis, in terms of duration, like just a 1 week, that's a huge move.
For sure.
And so lumber's ripping, and home builders are doing pretty well. And you are right now winning the bet. We'll talk about our bets in a little bit, because we have a home builders versus bonds bet that we can talk about. But right now, anyway, the home builder chart looks great, and there's no alpha male prairie dog to be in any. There's none to be found. Like this, it continues to strengthen and go higher. And so it's like, are the home builders going to do another rip?
I love this. I love them. I think they're going to lead. No, listen, you laugh, but the reality is
I'm not laughing. I'm not shorting them or something like that.
Okay,
right?
but
like,
the reality is that you economic bears have taken the bond yields down to levels that even if the Fed doesn't go ahead and do what you want them to do, you've still taken down rates, at the 30 year,
which
to
is
levels
very stimulative to real estate.
Yeah. Listen, and we talked about Trump always trying to get rates lower. Like, what's not to love? Rates are going lower in the U.S. in terms of there's at the very least there's going to be no Federal Reserve that's leaning hard like they were a year ago, or not even a year ago, 6 months ago. And that was the problem. 6 months ago, they were actively leaning against the economy. That is going to be gone. And we're going to find that all those millennials that have been living in their parents' basement or holed up, like 6 of them in a condo, are going to start buying houses. Now, here in Canada, the millennials all own like 4 condos because they're all speculating on real estate because it's been going up. But in the States, there's been none of that. And all
Well,
of the
not to
real
that
estate.
same magnitude.
Yeah, well,
And, I mean, you have to go if you go places like San Francisco and shit like that. There's like
Yeah.
pockets, but
There's-
if you're talking about the whole U.S. market, you're dead right.
Yeah, I think what I would like to own is like Kentucky, single family homes. I think those are headed higher. I really do believe
Right.
that. I think that you should never buy the reason that no one wants to own real estate is because everyone remembers 2008, and it's just like
That was the
technology.
consumer recession, and it's not going to be a consumer recession this time.
Right,
around.
and we're gonna find that those millennials that have been holding off, forming families and buying homes, they're gonna do what every generation always does. Like everyone tells me, oh, the millennials are different. Yeah, they're slightly different, but they're at the end of the day, everyone's gonna go and the desire to have families isn't gone. It might be muted a little, and it might be.
Can I offer you a speculation, and I want you to call me an idiot if not, if you think it's thing. But if I saw legislation that basically gave student loan forgiveness for that $1.6 trillion or whatever the number is of student loan debt out there, which is held by the millennials at that age that are thinking about buying, if you suddenly had relief, that could actually create an impulse wave of buying that would drive a new wave of home ownership. What do you think? Is that a crazy idea, or what do you
No,
think?
it's not a crazy idea at all. I'd be buying it with both hands and both feet and every other appendage I have, because the reality is that they would be going and creating demanding it and creating the credit that we've been sold. Like, you always talk about this. You always talk about the fact that there's no demand for credit. Nobody wants to borrow. I would argue that there's a lot of times they're not able to borrow, but it doesn't matter.
Yeah, that's their credit worthiness, right? Like, for sure.
Well, you are correct, though, that the demand has been limited. And if we saw what you just said, they would instantly go spend, and it would be hugely inflationary. The home builders would rip. And before we go any further, I just want to talk. We were talking about lumber. I had a good buddy, a smart fellow that I know. We were talking about value stocks, and he was telling me how he's buying all the Canadian tree stocks. He says these things, yeah, he's just telling me how cheap these things were, and they're just trading like death, and nobody likes them, and they're just down and out. And I'm going to go do some work on that, because I think it might be, another way to play it. And I believe if we remember Aiden from Pavilion Mac, yeah, he was a big believer in buying those names as well. So I not only do I like home builders, I think I'm going to eventually warm up to the tree stocks as well.
Yeah, the lumber stocks might be interesting. Well, one last thing. So one of the reasons why, look, I'm super bearish the broader stock market. And so no, you would have never guessed. But so to me, one of the hesitations of buying home builders is I am just not looking for equity exposure to if I was, then home builders would certainly make the list. But what do you think of the pairing of doing long home builders short the S&P pairing? Is that a silly idea, or what?
No, not at all. I like it because I think it's going to outperform. And if you're looking for a lower risk and you think that there's other things within the S&P that are way overpriced, like the Amazons, the Facebooks, the Apples of the world, and you could see a situation where the real economy gets going, I could see that trade working in spades. I have no problems with that trade at all. I give you a hard time because I think you're a little too bearish. It's not like I'm necessarily believe that everything is going to rip, and I am worried about those big names continuing to be able to lead, because I do think that there's going to be a shift to other types of companies, and that might mean the overall index not doing as well as some other sectors. So I have no problem with that trade. I like it actually a lot. All
right, so let's move on. So number 3, I wanted to talk about the small cap divergence. And so, okay, let's just put this in context by charts. So let me pull up quickly here. Let's start off actually with the chart on the S&P. No, actually, no. Let's use the Dow. We always look at the S&P. Let's start with looking at the Dow Jones here. So this is just the Dow Jones futures. But so what we had was basically the Dow Jones made it all the way back up to its highs back in April. Well, not higher highs, but it made it pretty much back to its highs. And even during this rally's been pretty strong, and it's just a stone's throw away from making it back to those highs, right?
Right.
The small caps, though, which the Russell 2000, which is looking at the 2000 smaller cap names outside of that. I think they exclude the top 1,000. So you're looking at the lower tier. Is it the below the top 1,000? Is it the Russell 2000? Anyway,
okay.
it's something like that. Well, I don't know specifically, and if you don't, that's fine. But this is the August high. And what's interesting is that the Russell never made it back to those highs the way the S&P and Dow and Nasdaq did, right?
Right.
And
it's stinking. It's like
Yeah.
not a chance. The small caps. Now,
And,
okay, I'll
but
let
look
you
at this
finish
rally.
before we go on.
But look at this rally. This rally in the last week when the S&P was toying with this big breakout, the Russell, there's no other way to put it, they're trading like shit. Like, this is a pathetic rally. And nowhere near the gusto that the large caps are ripping at. And so the question is this a better gauge? And I'm as to what the real underpinning situation in the economy and the markets are than the large caps. Is this divergence telling you that things should be as bearish as I am? Or are you going to somehow give me the bullish spin on this? Go for it.
I don't know. I'm not sure whether it's just a pause and we're about to, catch up. Don't forget that didn't they rip earlier? Like, didn't the small caps outperform? I'm just pulling it up on my Bloomberg.
Oh, yeah, right here. You're talking about this rip, right? Which is that they, during the 2018, first half of 2018, they made higher highs. Like, what happened here was that when the VIX blew, the VIX explosion occurred, then the S&P barely made it back to its highs, but the Russell kept ripping.
Right.
This is what you're talking about, right? This is what you mean, right?
Yeah, I don't have a good answer for you, Patrick. I'm not going to look at that divergence
but
and say...
can you agree with me? Can you agree with me?
Well, obviously, charts don't lie, so it's telling you that it's stinking. Whether this is an opportunity to buy small caps or whether it's a sign of the next apocalypse coming, I don't know. You believe this is the end of the world signal and that we should sell everything because of it?
I'll tell you this
sure.
much. If the Russell can't break those highs from April, then I would take that as that the underlying breadth of the market is incredibly weak, and that you can't trust rallies. And whether you look at the transportation index, which is behaving like this, or whether any of those other things, even like look at your regional banks. Like in the same way,
they suck. They're terrible. That's been another great terrible. One of my. That's a terrible, Kevin Muir trade. There you go.
Well, yeah, of course it is a terrible trade of yours, but you take a look at the rally in transport index, very weak, and so the thing is that you have a lot of this underpinning market that isn't ripping higher the way the S&P did. And the way all I want to leave our listeners with and give you my 2 cents is either one of two things. Either the breadth of the market's going to improve, and then you and Brent Johnson can have your little kumbaya moment as the market goes and actually rips to all-time new highs. But if the underpinning stock market from these indices continues to trade as shit as it has been in the last week, the bulls are screwed. You heard it from me here. I think that's just going to be an indication that the market's just going to roll over into the summer. That's my opinion. Any last comment?
No, I think that's a great way to leave that one. You heard it here. The bulls are screwed if the Russell doesn't rally.
Right. All right. Number 2, I want to talk about the Aussie dollar. And we talked last week, and we reviewed it here about the renminbi. And certainly China is a big storyline in what's happening with the Aussie dollar. Now, I know your favorite trade, and rightfully so, it's been a great trade, has been the Aussie CAD pair, right?
One second, Patrick. I have to timestamp a ticket because I think you just said something nice.
Well, I gave you kudos like a week or two ago on this trade before. Look, not every one of your trades are bad. Just most.
Oh
of
my
them.
God, the compliments just keep coming. I don't know if I can handle this.
You nailed one. You nailed one. Your Aussie bear story versus CAD has been worked. So
you know what? I don't know, because the reality is maybe I would have been better off to short Aussie. I'm not sure, but I like Aussie CAD better than I like Aussie straight.
No, the rationale behind your Aussie CAD was really good.
Yeah.
Just
wait until oil gets up off the mat, because everybody's shitting all over oil right now. Wait till it gets off the mat. CAD's gonna actually rally. This trade's, I suspect, now I probably just goochered it, but I suspect this trade is going to get better still.
I'm not opposed to it, but I wanted to talk about the Aussie dollar, the U.S. dollar Aussie cross, and the U.S. dollar had pulled back and all these cross currencies bounced, but other than the pound sterling, the Aussie was so quick to get right back to its May lows. Like it wants to give out this major support line.
Well, one second, Patrick. Do you know why that is?
Please indulge me. Was it the elections that occurred there?
No, it's not that at all. Remember back to January 3rd, 2019? There was an illiquid...
Oh, you're going to give me the bad tick shit.
Yes. There's no such thing as a bad tick, buddy.
Oh, Jesus Christ.
We're headed down to 66, because you watch this thing. That market ticked on that day at 65.80. We're going to
my wallet hopes that you're right. My wallet does hope you're right. All right.
No such thing as a bad tick, I'll tell you. I know you don't believe in that theory, but many decades of watching, three, in fact, as you remind me all the time, of watching the markets, there's no such thing as a bad tick.
Okay, so let's flip this over. Hold on a second, because the other place that had a bad tick was the yen. And again, I flipped the chart. Yes, you can shit on me all you want, but so we have here the bad tick as the yen rallied in the U.S. dollar.
I completely think that. I'm completely fine with that. Can you put this? Can you please put it to the real chart? I can't.
Oh Jesus!
It messes me up to see it watch that way.
There you go. Are you happy?
Okay, yeah, there we go. Yeah, no, for sure. We'll go below 105.
Okay.
I'm no such thing as a bad tick.
All right, in the spirit of the fact that we talked about trading places, I think it's time to pull out a Duke and Duke here, because I don't think it's going to.
Okay, but
on the yen. No, Aussie will, but not the yen. I don't think the yen. I don't think we're going to see 105.
Okay, well, that's fine. You're on.
Duke and Duke, $1. We're going to do this?
But yeah, for sure. A year from now, you're on.
A year from now?
Come on, that's like how many handles lower?
It's on a downtrend right now. Like, okay, you could say over the next 5 years it's going to hit 105.
Okay, end of year. I'll give you end of year. That's like what, 2/3 of a
months?
year. Yeah, or what? No, let's do end of year. It's an end of year. I think it takes below 105 this year.
Okay. All right, Lena, write that one down for us, please, because we're going to need to start tracking these. We'll talk about that in a little bit here. But anyway, so let's go back to the Aussie here for a second. The point is, incredibly weak and in a very pronounced downtrend, and it doesn't look like it's stopping. I mean, are we heading to 65 or 60 cents on the Aussie in your mind?
I think we're headed lower.
Like lower than 65, 60?
Oh, yeah.
So you're like in the Grant Williams, it's going to 50 cents.
I think Grant's on to something. Oh, yeah. I have no problem with Grant's. Like, what is Grant calling for? 50 cents?
50 cents. Yeah, 50
I have no problem with that.
So, let's see. If we go far enough back. Yeah, the Aussie. So we saw 60 cents back in 2008. And we saw 50 cents back in 2001. So
yeah, I have no problem. I have no problem with Grant's call. Grant's calling for 50 cents. I'm with Grant. I think things are I think it's going to be
for all of our Aussie listeners.
No, I love Australia. Don't think
let it be known that you should be long U.S. dollars, Canadian dollars, or anything else other than your own domestic currency. Because Kevin Muir said you're going full Argentina here.
I think that they.
No, okay, I'm actually somewhat in agreement with you. That
I know, but that's why they should actually go the other way. They should buy their currency, because this has got to be the bottom if we both agree. But I'm
Well,
bearish.
this-
I'm with
this
Grant
this
Williams.
price action is shit, and it does feel like it's going lower. But anyway, we're gonna find out whether or not it breaks potentially next week. So this is something our listeners need to watch. I think it's pretty important. It's by far one of the weakest currencies out there, and so if you want to short the weakest currency, Aussie's right there, and the pound's trying to compete with it. But anyway, it's harder to play the pound because of the political stuff. Number one. Kev, we already talked about this so much with John and everyone, is FOMC statement next week, but it has to be number one. We have to see what happens there, what happens from that press conference, how does the market react. I'm curious whether the S&P being pinned the way it has been all week has everything to do with everyone's just waiting for the Fed before they make their move.
I don't know. Like, a lot of things have gotten pinned. I think that
so like
FX,
the
volatility has gone down in a lot of instruments. I think that you look at FX ranges; it's been one of the quietest periods for the euro until recently, like until this last week. I think there's a lot of compression going on in a lot of volatility squares, and that everyone thinks that S&P has to move so much. It doesn't, and there's lots of summers that I remember owning. What I thought was cheap vol at 10 or 12 and just bleeding theta. I remember it, and you always laugh at me saying that you hate being long theta.
I just puked a little bit in my mouth.
Yeah, but I could tell you why I hate being long theta is because I've experienced what it's like in that summer when nothing's happening. And a lot of long vol
that nothing's
traders
going to happen this summer. Like, is that what you're suggesting here?
So this is the trade I love. I would own FX vol and fixed income vol while selling equity vol any day of the week. Now, FX vol has had a big move up because of the recent volatility, so I don't know if I'd chase that, but I would love owning FX vol against equity vol any day. People consistently are overpaying for equity vol.
But it's not like equity vol's back down to 10 or 12. I mean, the VIX is still trading 15, 16 here. So
I have no problem being short 15, 16 against being long the FX vol. No
like
problem
you're talking
at all.
about the MOVE index and shit like this. And
but I just think that everyone is consistently overpaying for equities because you guys all think the end of the world's coming in equities.
But what if it does?
Well, then I'll be screwed. I'll be screwed, without a doubt. If it ends up being that it is an equity crisis and that every hedge fund and every person on Zero Hedge and Twitter is right that it's going to manifest itself exactly like 2008. Well, then I'll have been wrong, and I guess the meet you in the machine will prove it in the P&L, right? I just don't see that as a compelling trade. I don't like buying hedges that everyone else buys. I like buying hedges for things that people aren't expecting because I think those, by their very nature, are what catches people and creates those sorts of crises. That no one's expecting. So I don't want to buy what everyone thinks is going to be the next crisis. I want to buy what nobody's expecting. I think a better trade, if I wanted to hedge my portfolio right now, I would be buying, I don't know, $100 oil calls that are long dated. I'm not sure because I'm more worried. Everyone's, concerned about China and the trade tariffs and the trade wars there. I'm more worried about a real war, in the Gulf of Hormuz or whatever it is. I think that there's more of a chance of that catching everyone off guard than there is about something happening in China. So do I think the Chinese situation is going to get worse? For sure. I completely could see those trade breaking down. But do I think that's already in the market? Again, for sure. Do I think that the problems in the Mideast are in the market? Not a chance.
Yeah.
Anyways, that's my 2 cents. There's my rant.
So we have two quick housekeeping things that we didn't put in the top.
Oh wait, let me do it.
I'll let you do it. So there's two things. Number one, there's the June futures rollover, and two is the quad. So why don't you give?
That was another housekeeping. First of all, for everyone that trades futures, remember that it's we're rolling over into SEPs. So we're going on most financial futures from an M, which is June, into SEPs, which is a U. That's the first thing. And then we have the quad witching and the quadruple witching on next Friday. So that's a big deal. I believe it's also an S&P rebalance day. So it should be a lot of action.
There's going to be, that's when dealers are going to get a lot of their gamma exposure spiking as well. So it sets up for, and it's interesting that that's going to be at the same time a few days before the Fed. So like it could be volatile next week.
For sure. Like it could be a lot of fun. I know personally that on those quadruple witching days, they're tough to trade, even the day or two before it, because they do
for day traders. When you say
that's
tough
right,
to trade,
that's right. I find that it makes no sense, and you have to be almost putting aside what you think should happen and just kind of going with stuff because some weird shit happens. Just be aware.